So let's talk about the difference between an independent contractor and an employee, especially within the construction industry. It's real easy to confuse these two things, especially if you start to use somebody on a regular basis. You have to be very careful. Now, the IRS is awesome enough to give us a 20-factor checklist. Something that you can look up on your own on the internet. Here's the form I'm actually going to use to go down that Jeff was nice enough to print off before we started this. They also have a second set of forms which gives you links, which gives you consequences, which gives you a more thorough outline. But today we're going to talk about this 20-point checklist. We're going to go down what we consider the most important points of this checklist. What do you find, Jeff, are the things that contractors make the biggest mistake on when they hire a subcontractor?
As far as classification?
Yes.
Yeah, I mean, a lot of people, it's obviously we kind of stressed on how much easier it is as the employer if you have a contractor, so people will kind of err on, especially just starting out, oh, I just want things to be easy and that. So I think a lot of times people are too scared about what it looks like to have an actual employee, deal with the taxes and that. The fear of the unknown, it's always been one of the great things people are afraid of. So that's the biggest mistake I see, is people just think it's so difficult and, oh, I have to do quarterly filings, and these are just things I hear from people. And again, it would be the same with me. If you told me to go and dig that swimming pool, I'd be in the same boat. Like, now what do I do? So that's the biggest mistake I see, is people just are too afraid and think that it's going to be a lot worse than it actually is, and then they'll just kind of ignore maybe knowing that it maybe should be an employee and go the contractor route instead.
So the big things that I want to call them the big points that I've noticed, because I've hired dozens and dozens of subcontractors. And I have a very clear set of rules that I require all of my guys to follow, especially if I start, because I'm a person that works off relationships. I worked with Jeff for years. I worked with his father before him. I don't vary. I don't price shop. I don't go here. I don't go there. Once I've developed trust with somebody, I use them time and time and time again. And I believe that they're going to do the absolute best they possibly can for me, because they should know that they're always going to have work. But that's where the IRS frowns upon it, okay? Because now you're developing a continual relationship which can be construed as an employee rather than a subcontractor. So a few of the things that you got to make sure you have on hand when you hire that independent contractor is they set their own hours. You as the boss, as the employer, can't go and remember. Okay, so here's a few of the big things that I really want to point out that you got to make sure of. You do not set the hours. You cannot tell an independent contractor when they can start their project or when they can stop. That's out of your control. They are an independent. They are their own boss. That's what being an independent means.
Yep.
Right?
Correct.
Also, they don't turn in hours to you guys. They may want to have their invoice be on an hourly basis, but they don't have to actually give you the breakdown of the hours. They can just give you an invoice. Now, that is kind of a gray area that you can request specific hours. You can request, just like if you're working at, bring your car into the auto body shop and they tell you they worked on it 17 hours, you can ask for a breakdown of hours and you can ask for that. But as an independent, it's not up to them to give you the hours. It's not up to them to show you on a daily basis when they worked, when their lunch break was, and when they finished. Am I right, Jeff?
Yes, and I think the two terms you're using is one of the things that would cause issues. Is if you're an employee, you're going to turn in your hours to your employer. If you're a separate entity, an independent contractor, just as I would give you an invoice, I don't say, here's my hours, Stan. It's just that separate entity, and you want to establish that that's the relationship, that I don't report when they come to work.
So one of the other things that they don't report the hours to them, they don't have to report the hours to them. Here's something else. As an independent, they need to carry their own insurance.
Correct.
They really should be their own legal business entity. whether that is a corporation, which is actually the best way to get an S Corp. That's my advice, but you know.
Definitely fine as well.
Okay, so if you really want to have somebody that's coming in, you don't want to have any repercussions. They really should be their own S Corp. They should also have their own EIN number, right? Is that the right term?
If they're going to go the route to be an S Corp, they would have to get an EIN.
And
Correct?
EIN stands for what, John?
Employer identification number.
Okay, and you're going to want to copy that. They carry their own insurance. That's a big thing,
Yep.
right? Because they're an independent. If something happens to them, it's not on your guys' dime anymore. It's on their own dime, and you're going to want a copy of that insurance.
Yeah, and you're going to want to make sure you get the W-9 filled out so that you have their Fed ID.
Before you get them, before they come on. Yep, anybody.
And another thing with 1099s then, which is a good point for if you have LLCs or S Corps with Fed ID numbers, currently, and if the IRS doesn't change this, you don't even need to issue a 1099 to somebody who's using a Fed ID for their ID number. There are some exceptions, but in this
Okay, wait a
industry,
minute. You just lost me, Jeff. Say that again.
So if you have a subcontractor and it's Jeff Law individual, and I make over $600, which is the threshold for issuing a 1099, you have to file a 1099 with the IRS and send it to me. If I am Jeff Law Incorporated using my EIN rather than my social, you don't have to issue me a 1099. So
That's huge.
it cuts down on your reporting as well.
But is that nationwide, Jeff?
Yeah.
Okay, so that's not just Minnesota.
No, that's the current IRS rule.
That's the current.
Like I said, there's some asterisks for attorney's fees and a couple other things, but...
And all you guys in Australia and the United Kingdom, see all the crap you're avoiding right now? Half the time I wish I lived in a different country, but God bless America, it's just all this red tape and paperwork that they make us go through and all the hoops that they jump through. Another thing with being an independent contractor versus being an employee would be they have to have their own tools. They can't use your tools. They can't use your skid loaders unless they lease them, right? Can you do that lease thing where if they get on let's say you hire an independent to mow lawns for you, can they lease your lawnmower from you, or a skid loader, or a truck?
Yeah, and it just kind of tying it back again to the separate entity type thing. If I'm Jeff Law Incorporated, I should have all my own equipment and not be just Jeff Law, the individual, working for Stan Genadek, one of your corporations.
So really, they should actually own the equipment. Would be the clearest,
as
easiest
much as possible.
path. Okay.
But if you don't own anything and use all of the employer's stuff, it's going to be a tough sell if you're ever questioned on that relationship, then whether it's contractor or employee. But if and sometimes you're not going to have all the equipment, so to use some of it, it's just kind of the old, when you abuse things, if I don't have anything myself and say I'm going to be a contractor and only work for you and only use your equipment, you're not going to win that argument. You're more of an employee then.
Exactly. And when they question you, they're not just going to question you, okay? If you actually get brought in for an audit or you get brought in for an investigation, it's not going to happen quickly. It's going to take about a year to 18 months, probably, to complete on average. Would you say, Jeff?
Yeah, some can go quicker, but that's probably average.
Okay, so they'll start it, and then you'll think, oh, I don't know what's going on. And then they just keep going and keep going. And they will interview everyone, and they will also pull all of your bank records. Mm-hmm. They will pull all of your documents. They will pull from every bank, every transaction you made. They will go through, analyze, and then they will contact each one of those people and interview those people as well. So you want to, this isn't something that just gets brushed under the rug. You want to make sure you're doing this the right way. That's why we're taking the time to record this interview, because I want to make sure you guys out there understand the implications of having a subcontractor or having an employee. And although you may perceive them as being one thing, if the IRS doesn't agree with you, guess what, Jack? Guess what, Jill? You got just lost. There's no going back. It is what it is. What other significant components of this 20-point checklist do you think we should bring up?
Yeah, I mean, I think we kind of touched on the main ones. One of the, I guess if you just read through, instruction, training, we kind of talked about that.
So let's read through it. Number 1 is instructions. 2 is training. 3 is integration. 4 is services rendered personally. 5 is hiring, supervising, and paying assistance. 6 is continuing relationships. 7 is set hours of work. 8 is full-time required. 9 is doing work on employer's premises. 10 is order or sequences set. 11 is oral or written reports. 12 is payment by hour, week, or month. 13 is payment of business and or traveling expenses. 14 is furnishing tools and materials. 15 is significant investments. 16 is realization of profit or losses. 16 is an important one too, we should probably go back and hit on. 17 is working for more than one firm at a time. You're going to always want to make sure that they're not just working solely for you, because if they are, you're dead there. 18 is making services available to the general public. They shouldn't just work for you.
Yep.
19 is right to discharge, and 20 is right to terminate. So those are a couple of the things that stood out there. Was realization of profit or losses and working for more than one firm at a time.
Yep. And that is all kind of, again, if it's just Jeff Law, the individual, I know what I'm making. I'm making $10 an hour, getting my check for that each week. If I'm Jeff Law Incorporated, I'm billing by the job. And then I have a realization of profits and losses. I have my own expenses, insurance, which we talked about, materials, tools, supplies, all those type things, as opposed to being an employee, and your employer provides all of those things, and I am making my set amounts. That's what that one's referring to.
Okay, and one of the things that I want to point out is, to you guys and gals out there right now, this isn't a reflection of Jeff, this is a reflection for you guys. If you're going to H&R Block, if you're going to one of the big generic law firms where you are more of a number than you are a name and a relationship established, working continually, you're not going to have a person that you can call up that knows your company's history, that you can go, hey Jeff, I need this, this, and this done, and expect to get results. And I'm going to recommend to you to find an accounting firm that works with small businesses, that specializes in the type of work that you work with. Now, a lot of them will tell you, oh yeah, I know this, I hear it all the time. But really what you need to do is you need to sit down, and you as the employer, you as the business owner need to interview the accounting firm that you're working with. And you need to make sure that that firm that you're working with will be there year after year, because you plan on being in this business for the long term.
Yep.
That's an important thing. And then once you do that, they can also handle your payroll. Jeff handles all my payroll for me. He handles the quarterlies. He handles pretty much everything that I need to do. I'm hands off. I have, as a business owner, I have to be familiar with the workings of everything, but I don't have to know all the rules and regulations. Guess what? That's his job. I leave that up to him. He knows all that stuff, because I'll tell you what, if I had to sit here and look at that all day long, I think I'd probably go a little crazy.
Yeah, and it's a good point, and I liken it to me. I'm not real handy. If I was gonna try to repair my own deck or something like that, it would be a nightmare. And that's what I see. And there are some that can handle their own payroll or certain pieces, and I tell everybody when I do a free consultation, when everybody comes in at first, I kind of tell them what each little piece costs, whatever they're interested in, the payroll or quarterlies or returns, just kind of what they're looking at, and explain people can do any of those pieces or all themselves. But again, it goes back to me doing my own deck. If you don't have any experience or know what you're doing, I mean, it's the information online. If you try to read up on it and follow what you're going to do, it's exhausting. And I mean, people that are starting a new business, you remember when you were starting, you're not working 40-hour weeks as we touched on before, and nor am I as a business owner. You work a lot. You don't have time to focus on stuff that is going to take you a lot longer to do than just to pay somebody in. And I'm not saying to not look at your expenses either. Budgeting is another very important thing that I think people don't do that should be doing.
I want to bring up something that you mentioned about budgeting, Jeff. Don't hire your cheapest accountant, okay? Don't if you're going to get by with hiring your cheapest accountant, you're going to pay more in taxes. They are worth their weight in gold. A good accountant will take a huge burden off your shoulders, which allows you to do more work, which allows you to go out and pursue the things you're good at. Whether you're a contractor, a landscaper, a business owner, doing whatever you do, when you stop worrying about the tax man and you start worrying solely about optimizing your business, you will gain more profits, more freedom, and you will grow, okay? You got to team up. I consider this a team effort. In fact, so much so that Jeff brings me into the office and teaches me things that helps me run my business better. And that's what we're doing here today. In part 2, I got Jeff to agree to do a 2-part series with me. The second part is the next interview I do with Jeff will be what I consider to be one of the most fundamentally important interviews and things you can do for tax planning, period, hands down, without question, and that is pre-tax season planning. We're going to go over strategies, what to do, so you stop being a victim and you start being in control. So look for the second part of this video series, because I can guarantee you, to me, I can't give you any stronger advice, a stronger opinion on any subject than to make sure that you are prepared for the tax season. Look for that interview down the line in our series.
Yeah, it's funny you mentioned it. I was thinking how just how important the planning aspect of is it, and how people get, so many people that I have that, especially when they're just starting out, don't do their records and file an extension, and now you're trying to go back and recreate records from over a year ago, right? And it just, then it gets to be a burden, and once you get behind, it's the old snowball effect. And it's funny when people do get out of it, yeah, you might have to, if you haven't filed for a little bit, you're gonna have to pay some money. I mean, I won't be unrealistic with that and tell you otherwise, but it is a huge burden to get caught up. And so yeah, don't ignore these things. Deal with them head on, and with a little planning, it really isn't that big of a deal. And like you said, once you've been going for a while, you just kind of leave it here, and you don't have to worry about too much of it. You just run your business, which is what you're supposed to do. Run your business and make money doing what you do best.
Perfect. Jeff, thank you.
Thank you.